Hello, in today's video we want to talk about what forex trading is. So you can ask yourself, what is forex trading? And as you can see on my screen, forex trading is the biggest financial market in the world, but most people don't even know what is actually being traded. In the market, we have so many things that are being traded, but we just have to know and understand what the market really entails. And what forex actually is very simple. As you can see on my screen, forex deals with exchange of currency. And for example, you can see if you go, maybe like if you're already trading or you're just trying to learn how to trade, you download your trading view, you will start seeing currency pairs, which consists, you will see something like the USD, you even see the NGN, which is our normal Naira, you see the EUR, which is the Euro, and we'll see the USD. And this can be merged up to form pairs like USD NGN, EUR USD. So it consists of two currencies which are being paired, which are called currency pair. So that's what is being traded in the financial market. And the financial market is what we all know as Forex. Moving on, you will know that you are not just trading money for money randomly. You are trading currency pairs. This consists of two different currencies being paired together. Let's move forward. What is being traded, which is very important? Currencies are traded in pairs, just like I said before. And you can see on my screen, we are looking at this pair, which is EUR USD. Just look at a pair, just like how you have your normal slippers or sandals or shoes. They come in pair, they come in two, and two makes a pair. So as you can see in the second option, you see one currency is being bought while the other is being sold, meaning that while you are buying a particular currency, some people are selling that particular currency. So it is based on the strength, which you can see in the third one. Price move based on strength and weakness. So it's that strength and weakness that determines if you are going to be profitable or not. If you know when the currency is strengthened, or if you know when the currency is weak to the other one. Note, forex is basically betting on which currency is stronger. So as you can see, in forex trading is all about calculation, checking different bases to know why a currency has strength or why a currency is weak. Moving forward, you can see on my screen again how traders make money. This is the most part I would like you to focus on, because this is where most beginners get confused. You buy lows, sell highs, or sell high, buy lows. I don't know if you understand that. Let me take it again. You buy lows, you buy at lows, you sell at high. This is what consists in discount levels. You buy at discount level. That's what retail traders do. We buy at discount level. And profit comes from price movements, which is pips. We are going to be teaching that, but I want to first start with this so we don't rush our class. Profit comes from price movements, which is pips. And you don't need to own the currency physically. You don't need to, some people have purchased BTC and put it in their wallet. You purchase Ethereum and put it in your wallet. But in the financial market, you don't need to buy a particular currency pair and own it personally before you can sell it or buy it. It's just raw trading. You get rewarded by trading smart. For example, you are not buying dollars to store them. You are trading the movements between currencies. That's what you should understand as a trader. You are not buying dollars to store them or any other currency to store. You are trading the movement between currencies. That's why I said previously, when you see something like forex is basically betting on which currency is stronger. So it's all about smart trading of movements, knowing what is making a particular currency to move. or making a particular currency to be strong than another currency. So moving forward, he said we want to know who controls the market, which is very important. Who controls the market? We need to know that the banks control the market, the governments control the market, big institutions, which we all know as smart money, retail traders, which are small traders like us. Key idea, which I would like us to know. Retail traders don't control the market. We follow. We are among the market, yes. We are not left out. We all make up the market. But our money is enough to move a trade that far. So why we follow is because these big institutions, these banks, the government, and other big boys that are in the market have a lot of money to push the market. And what moves the market? Money. Money moves the market in large volume. So large volume of money moves the market. That's what we should know. So as you can see on my screen next, we want to know what actually moves the market. What are the things that make the market either to go up, to go down, to have spike and fall? News does that. Interest rates, as you can see in news, you see interest rates, you see inflation, you see employment. So the app you can use to check that, you can use your calendar, your Forex calendar, you can use your investing.com and so on, the Forex factory, to check your news, to look at news events. So the news event impacts the market by making it maybe to spike up temporarily, because sometimes it doesn't decide how the market is going to move. It just make a temporal shake in the market. But most times the spike are much, but the movement are temporary. Sometimes 30 minutes, 15 minutes, sometimes 1 hour, but they are kind of temporary. So it doesn't last that long in the market. So what else? We can see market structure, buy, sell, pressure. When you see a currency like USD and GBP, which is the dollar and the pound, the buying pressure of the dollar, if it's very high, you tend to see that the dollar is going to rise because it's more stronger to the GBP. But when you see the GBP strengthen, then you're going to know that the GBP is going to fall and the GBP is going to fall. That's to show that the GBP is more strong. But if you check it on your trading view or any other platform you are using, is GBP USD. Sorry about that. It's GBP USD. So when the dollar is strong, it sells. When the pound is strong, it buys. That's what strength is all about. Liquidity, where big players enter. What is liquidity? Liquidity is where money lies. That's why if you are a beginner, you are new to this, don't worry, we are going to get there. Just have this jotted down with your note. We are going to get there. Liquidity is where money lies, where the big players step in and see that, okay, there's money on this zone. Let's not buy from here. Let's sweep this part and then we continue buying. They know where liquidity that can be kept. They know where you can keep your liquidity. They know where traders keep their liquidity, because they know that we don't have large volume. We don't have large volume. So our stop losses are tight than theirs. Moving on, you can now see the common beginner misconception. This is a very powerful one. When you see a beginner saying Forex is gambling, you predict the market perfectly, indicators alone make money, all this kind of talks, you don't want to follow proper market structure, you don't want to follow discipline, you just feel like it's all about predicting the market. And see, as you can see, it's not all about prediction, it's about knowing what you are doing and having the perfect skill in what you are doing. It's all about probability, not prediction. Just like how we all are in secondary schools, in your school days, there's a topic where you treat probability. You are not 100% certain that this is going to be like this, but your certainty is about 70%, and you knowing truly sure that yes, I've seen this work before. It's about experience, gathering experience in the market. So that's what Forex entails. So you thinking it's gambling, or you thinking it's all about predicting, just like how you do your betting and all. It's not so. And indicators alone can't make you money. So you have to add confluences, knowing your break of structures, market structure, knowing about liquidity. So when things happen in the market, you know that yes, this is what happened, this is what caused this trade to go bad. And do more of back texting. Recap your trades. Don't just trade and go off the charts. Know your mistakes so you can learn from that and not repeat it again. This is what I want to talk about. I just said a lot about it in the previous picture we just saw. What trader actually does. As you can see, what a trader actually does. He analyzes the charts, wait for setup, manage VIX, take trade based on strategy. You have to have your own strategy. You can't just do because of Mr. A is buying, I'm going to buy too. Mr. B is buying, or Mr. C is selling, I want to sell too. You have to have your own conviction that yes, this is what I want to buy. You don't just buy because of a popular, well-known forex trader is buying. That's why you have to understand trading by yourself. You have to understand trading by yourself. So if others are buying, you are saying, yes, this is what I'm seeing that is making them to buy, not because of you are following the majority. If you are taking a sell, trust me, you're not the only one taking that sell. Some other people are also seeing that same sell setup that you are seeing. But do you have the strategy? Have you analyzed the charts? Are you just buying based on prediction instead of probability, instead of you analyzing to know that yes, this is what I'm buying? Manage your risk. No, there's no perfect trade. You have to manage your risk and know that yes, if I lose this, I can still come back tomorrow to trade again and wait for your setup. There is no perfect setup, but you have to have a particular strategy that when you see this in the market, you know that yes, it's time to buy, yes, it's time to sell. I'd like us to close with this mindset. Yeah, just knowing that Forex is simple to understand, but not easy to master. And the difference between winners and losers is discipline, not knowledge. Because in the market, you might have all the knowledge, but due to lack of discipline, you want to up on every trade, which is going to drain you financially, mentally, and you might not even be able to turn up the next day. That would make most beginners blow their accounts and just end up giving up and calling Forex a scam. So with this, I'm sure that I'll be able to touch this particular topic on what Forex trading entails. And I'm hoping that in our next video, I'm going to teach a more critical topic, which is why the market moves. And I'm going to explain what liquidity is. I'm going to simplify it for us to understand. Thanks for watching, and I'm hoping to see you in our next video.